Hello and welcome to Fidelity Connects. I'm Glenn Davidson. What happens when human insights meet advanced analytics? That's Fidelity's Quantitative Research and Investments team, or QRI, a team where data scientists, mathematicians, and portfolio managers work side by side, all focused on one goal, finding the next great investment idea. And today we're giving you a look into their world. So how does our next guest turn data into investment ideas? And what does it mean to have this capability at a private company like Fidelity? Joining me now to unpack all of this and more is QRI's Head of Advanced Strategies and Research, Gilbert Haddad. Gil, great to see you here.
Good to see you too, Glenn.
Thank you for being here. You're actually going to Montreal after this. What's going on in Montreal?
I am. It's amazing to be here. I'm excited to be in Montreal. So we do sponsor a research center at one of the top universities over there. And then they're organizing this hackathon.
A hackathon?
Wow. They bring students from all over the country. They compete for 24 hours on building investment strategies. And then the top winner gets a prize of $15,000. It's pretty exciting for us. It's a way for us to engage with the community. It's a way for us to look at top talent and then make sure we participate in the local economy as well.
Wow, that must be fascinating and an interesting way to source some future employees as well.
Exactly.
Well, I wish you a good trip there. But first, let's talk about you. You have a PhD in mechanical engineering. Yep. And I was reading some things about you that earlier in your career, you used to assess equipment for the lifespan and so on. There was a story you told about going to West Texas and sitting there trying to figure out how to analyze a pump and how long it was going to last.
Yeah.
And now we're talking about QRI. Tell us a bit of your story.
Absolutely. So I started my career or my graduate studies the degree was in mechanical engineering. It's a cross-disciplinary center between math, stats, and engineering. And the idea was, how do you use machine learning to forecast the life of industrial equipment?
Okay.
And it was sponsored by an industrial company to do it for jet engines and wind turbines. Upon graduation, I got hired by an oil service company. I said, well, you've been doing these models on data on jet engines. Can we do it on oil equipment? Because the cost of downtime is very high. And then so sure enough, I joined the company. It was fascinating. What I realized is the models are the same. The data is slightly different. And then the end goal is exactly the same. You're trying to forecast or predict an outcome. Mm-hmm. So it was fascinating. We did it for frag pumps, drill strings, all sorts of oil equipment. Mm-hmm. And then from there on, I got hired by a hedge fund. And then the value proposition, well, our data looks somewhat similar, but the models can be really.
Did you realize that? And that's how the hedge fund found out about you? Or did the hedge fund source you?
The latter.
Okay.
And then it was sort of at the onset of alternative data.
Interesting.
And then the financial community started to source all sorts of interesting data sets that are what we call alternative today, are non-traditional data sets giving you views on companies. And the idea, can you use models to forecast the fundamentals of companies using these alternative data sets? Mm-hmm. Turns out to be fascinating, and I found my calling. And then since then, I've been in finance.
Okay, so you're heading up your CIO of many strategies within the QRI group.
Yep.
Our viewers will think, hey, Peter Lynch and all these other famous managers always talked about fundamental research. There's technical, because many of our viewers also are familiar with the chart room. Yeah. But the quant side, has that always been sizable at Fidelity?
You know, quant has existed in some form for decades at Fidelity. It wasn't up until 5 years ago that the firm decided to build a real quant organization, or a big organization to be able to compete in the marketplace. So they hired Neil to lead this organization. And then since then, we've become a giant organization. 220 researchers supported by 250 quant developers. And then we have about $390 billion of assets. So from 0 to 5 years, or within the last 5 years, we now compete with very serious quant players in the marketplace.
Wow, and Neil, of course, Neil Constable, who's also done some of these webcasts. And so you looked at Fidelity as a way to connect the research that you've done in a investment and economic way, if you will. And I guess the private ownership side of Fidelity must have aided in your decision as well, as far as being able to expend expenditures and so on wherever they need to go.
Absolutely. So there's the private ownership and the fundamental data. We talk about Peter Lynch and the legacy of 75 years of doing fundamental research of the firm. That's incredibly rich in terms of information being produced. And then when we're trying to bridge quant and fundamental together, it's an undertaking that requires support, that requires investment, and requires patience from the organization. And I think Fidelity has been a sweet spot and an incredible place for us to be able to marry quant and fundamental together for us to get to the outcomes that we have today.
And in doing that, that outcome is alpha capture, what you're trying to seek. Explain that, please.
So alpha capture, let's talk about the concept historically. Alpha capture dates all the way back to the very first hedge fund. And the idea is the gentleman, Alfred Winslow Jones, used to go source ideas from sell-side analysts and then would get the ideas and would put them together in a portfolio. And then the concept there is you have fundamentally driven ideas from experts. And when you put them together, you can strip out all sorts of factors that you don't want to incorporate in the portfolio, and then you end up with a better portfolio than the individual alpha streams. Fast forward over a couple decades, the hedge fund industry started doing that internally. So you have the what's called multi-manager hedge funds. They have multiple portfolio managers and analysts. At Fidelity, we have all the raw ingredients for us to do something even better than that. We have 130 analysts, incredible coverage. We capture data throughout the life cycle of their idea generation. We have ideas from portfolio managers that allow you to do best ideas portfolios. And we have the giant investment in alternative data. You put all of these together, you have ingredients to create this alpha capture strategy that's truly unique and differentiated.
So it's taking all of those research reports that the fundamental analysts are writing every day, making them available, but you or I might physically go through those. You wouldn't because you've got connection, but I'd flip through them all. But your group can actually process all of that fast.
Exactly.
Any time of day, 24/7, and so on, and then make a conclusion from that.
Exactly. So let's imagine a scenario. You have 2,000 companies within our coverage, which is some sort of liquid universe within either US or US and Canada. And in 2,000 companies, you have around 50 companies on any given day that have a change associated with them. So what does it mean? A company might have a meeting with CEO or CFO. Another one might have a rating change. A third one might have a earnings print. A fourth one might have a price target. For you, Glenn, if you're reading all of these, for you to read the reports on these 2,000 companies, it's almost impossible. And then not just read, try to understand, analyze, and then for you to take an action in the portfolio. It's almost impossible. For a systematic strategy, it allows you to capture all that incremental information in a very efficacious fashion, and then you put it in a portfolio and capture that alpha.
This must be something, as you said, it's been the last 5 years as things have really started to grow in QRI. And the sky must be the limit, because as technology, as AI, everything is really becoming much more prevalent. But the future is going to be bright as well.
Absolutely. The technology has evolved dramatically. Yeah. What I think the constant is change. Things are always evolving. That's a constant. But the other constant that I have is we have data that's proprietary and differentiated that no one else has. And then that's going to set us apart over the next 3 and 5 and 10 years to come. Even if technology is changing, it's going to allow us to exploit the information set in a much, much better fashion.
Okay, you've intrigued me, you've intrigued our viewers, because you just said you have access to data that others don't have.
Yeah.
Now, it's nothing that we shouldn't have.
Exactly.
But you have the ability to get.
Yeah.
We better talk about that.
Yeah. So let's talk about 3 sources of information: analyst data, portfolio manager data, and alternative data. The first 2 are proprietary. They exist only within the 4 walls of Fidelity. The third one is differentiated, and we'll talk why. So analyst, the company has done this amazing job at collecting the data throughout the life cycle of the idea generation. So if you're an analyst, you go meet with the company CEO or CFO. We know who you met with, when you met with them, and the note that you write after the meeting.
Do they document that and they lock it in the system? Okay.
It's one system for everybody, and it's the same format. Then you go update your financial model in the company. It's captured, the EPS estimate or the forecast and the KPIs, all of them are captured, piped into database. Then you go write the note on the security. It has a rating from a strong buy to a strong sell. It has a price target. It has a flag about if it's a disruptor or not, and then a variety of other flags. And it has the long-term thesis on the security, and it has your updated views on what you've learned from your research on the security. All of it is captured. Then you go update your paper portfolio. We capture that information. And the best part, that information is captured for more than 20 years. And then if you ask me why, it's because data is in the firm's DNA. And then it's just an incredible data asset. And so the first thing you look, is the data efficacious? And the answer is absolutely yes. It's being used by our amazing portfolio managers for years and years and years, and they use it to generate alpha. Now imagine what you can do by testing ideas going back for 20 years and measure the efficacy year in and year out. So that's the first data set.
Okay.
The second data set is the PM data. We have more than 50 portfolio managers, different stylistic ways of trading, and then they have low turnover and long tenure. It allows us to create the wisdom of the crowd. So on any given day, we can answer the question, what are Fidelity's best ideas in terms of large cap growth ideas? And then very easy to answer. It allows you to source the ideas from the best portfolio managers out there, put them in a signal. The third one is the alternative data. Alternative data, as we said, it's non-market data. So think about it, credit card, email receipt, satellite imagery, geolocation. These are data sets that are available on the open market. Now, what it takes is the ability to spend a lot of money to acquire these data sets and having teams dedicated for them to ingest, process, and create insights. So it's a substantial investment. Over the last 5 years, we've increased our spend significantly there. We've increased our resources because the firm believes in the value proposition of data in general.
And that type of data is cell phone usage, aggregated, of course, not someone's individual, I hope, but credit card usage and so on. And you can derive a lot of information from that at a particular vendor or geolocation, I guess it's called.
Exactly. So we cannot use any PII or MNPI. So all of these data sets you can use.
What does MNPI mean?
Material non-public information.
I should have known that.
Or personally identifiable information for PII. We cannot use that in general. So there's very strict controls and processes around it. But you can answer some very interesting questions. So we talk about, if you have, right now we're in the season of, in the fall season, and then a number of vendors have these promotions about pumpkin spice latte on Tim Hortons. If you would like to answer the question about how many, what's the sales from pumpkin spice lattes at Tim Hortons in a specific location, that's a question you can answer. Well, how would you do that? You can geofence a particular store. You have the data for cell phones going into the store. And then, of course, you're not tied to individuals, but they're anonymized. And then you have email receipts telling you about who's buying and what they're buying, and then their credit card purchases. And you can measure that before the season of pumpkin spice lattes, and there's ways for you to get that. But it allows you to answer questions that are very, very granular and detailed, and allows you to get an information edge. And then that's tremendous. So that's the alt data, the component that we spent significant resources. So we have these 3 data sources, and they allow us to create these signals. And the signal is really a fundamental thesis that you can test with data. That's all it is. And then you put it in the portfolio.
And that's just one small example. And we appreciate your Canadian example, by the way. But it's interesting as consumers to know how we're being watched and aggregated by where we are, by what we're spending, and where we're spending, and so on. So if I'm a portfolio manager at Fidelity, I'm really in the middle of a Venn diagram, aren't I? Where I have access to fundamental research, technical research. I can use all the charts that are online or even walk up to the chart room. But I also have this QRI group that's giving me this level of data that really other companies probably don't have. How many not how many. You've got portfolio managers that must be all in on what QRI provides. And then there's probably a few portfolio managers that say, I'm still trying to figure this out, but once in a while I'll need a data point. Is that true?
It's absolutely true. Just like any technology, there's an adoption curve. You have the early adopters, and then it follows the different 4 or 5 stages. And then what we've seen, the important thing for us that we gauge is we want to increase our footprint with the fundamental investors by 20% year on year. So what does it mean? Next year, I want to make sure I talk to 20% more portfolio managers and analysts and increase engagement with the existing ones by 20%. And then that's something we've done for the last 4 or 5 years. And we want to make sure to continue because there's true edge in that data. And we want to make sure that we can disseminate it to the entire firm and make sure that everybody benefits from it.
There is edge in the data. And so let's look at Fidelity from a competitive advantage standpoint. The private ownership, no doubt, helps. The size of the team that you're part of and the education that everybody has, no doubt, helps. Is there commonality in this on the street, or is this quite exclusive?
This is very exclusive. The analyst data, the PM data are quite exclusive because definitionally they exist only within the 4 walls. And then for any company to have that massive of an equity research department is very, very uncommon. There's maybe 1 or 2 players out there that have something similar, but nothing of that scale. Alternative data, for a firm to be able to spend that much resources and then headcount is very, very unique. And then this has been championed by hedge funds and for the last 5 and 10 years. And Fidelity has come in, and we've come in very, very strong. And it's a race to the bottom, meaning that the more you can spend, the more differentiated the data sets that you will get, then the higher the alpha potential that you have. And then the players that fit within that category are very, very few.
Hello, investors. We'll be back to the show in just a moment. I wanted to share that here at Fidelity, we value your opinion. Please take a few minutes to help us shape the future of Fidelity Connect's podcasts. Complete our listener survey by visiting fidelity.ca/survey, and you could win one of our branded tumblers. Periodic draws ending by March 30th, 2026. And don't forget to listen to Fidelity Connects, The Upside, and French Dialogue Fidelity podcasts, available on Apple, Spotify, YouTube, or wherever else you get your podcasts. Now back to today's show.
I think, with the emotions in this market, the volatility that we see every day, I don't know what the market's doing today, but as you see, it's up and down all over the place. This must add discipline to investing.
Absolutely. So the alt data is giving you views on the fundamentals. So maybe let's break it down in terms of a concrete example. If I'm looking at the revenue from a particular restaurant, pick your favorite burger restaurant. If what you care about is the year-on-year sales growth, the data is giving you exactly how many burgers are being sold on any given day. You can reconstruct that index, and then you can measure year-on-year. It has no views on what tariffs are going in which direction, in which countries. It's just telling you what are the sales today.
Core data.
Exactly. Yeah. And it's telling you about the fundamentals of that particular company, no emotions whatsoever. And you can use that information to inform your investment if you're a portfolio manager.
Where does this not work?
Just like any data set, it has its own biases. So when we talk about credit card data, you don't get data for every single person in the country. You get a very, very small sample in the small single-digit percents. And then the first thing you do is you measure, is that representative enough of the entire population? And then once you get comfort, you do that. Now, of course, representative enough, it means that sometimes you're going to have errors. So that's one case where it won't work. Other cases where you get delays in terms of the data. A third case is when the stock is trading on something that's completely different than what you're modeling. Imagine that the company is introduced a promotion, and the stock is trading on how efficacious that promotion is. If you're measuring top line revenue and sales growth, it doesn't really matter. Even if you have an absolutely accurate forecast, it doesn't really matter.
Companies come to see Fidelity all the time on the 14th floor at 245 Summer Street in Boston, as they do here in Toronto. Do they ever come in and say, what kind of research do you have on us? Fidelity's asking them a lot of questions, but they must be fascinated by the amount that they could possibly, and I don't know if you tell them or not, but do they ever ask that?
Good question. I haven't seen it yet, but also I'm not present.
They may not be aware.
I'm not present on all these meetings, or they may not be aware too. What I do know is the same level of data, it gets sold for Fortune 500 companies through other channels. There's a lot of companies that are interested in their competitive advantage and how they're doing in the marketplace. So they go procure these data sets from the same companies that we procure data from.
The question I asked you about where doesn't it work, it made me think that perhaps that's also creating a learning, because sometimes maybe the data doesn't work properly, or there's something that was inefficient about it, but then that causes a restructuring, and it's better going forward. I mean, this is just like an EV car or whatever. Sometimes things don't work properly, they refine from there and they move forward. So it's probably something that's evolving by the minute as far as what resources that you have and the abilities that you have. Where do you see this going in the next few years?
I think today, having access to that data has become table stakes. For you to be able to compete on the same alpha as the biggest player out there, you need to have it. Going in for the 5 and 10 years, you have to use it slightly differently, or you have to get data that very few people have.
Yeah.
So, I mean, these are the two ways for you to generate alpha. Either you have data that no one else has, or you use it differently. So I think for us, spending the cycles to understand the biases, and then how do we use that data better and update our models, and augment it with new data sets, is the way I see the future coming for in the next 3 to 5 years.
I hope this is a fair question. Has there been a slice of data that's come across your desk where you thought, I had no idea we could get to that level? Has anything really fascinated you that you can talk to us about?
So there's nothing that we can get access to that that we can use that can be MNPI or PII. So let me reiterate that.
There's a level that it's going to go to, yeah.
Yeah, for example, even if you can get 50% of a specific credit card company, you cannot use that. The compliance department will not allow you to use it, and then that's a legal liability. But so we never come even close to that. But more recently, we've seen an incredible evolution in terms of different vendors putting their data on cloud infrastructure and platforms. And then they're realizing that not only they can migrate their data to a cloud, they can start monetizing their data. And monetizing their data is that cloud infrastructure connecting us to them and then having that conversation. Hey, are you interested in selling your data? And then 3 times out of 10, I talk to these companies and they have no idea that they could sell their data.
And then they have to set a price.
Exactly. And then we're talking about small-time retailers in Europe or grocers in some other geo market, where in their mind, they never thought that somebody is going to care about the specific sales on their shelves in a specific market. And then that for us, it's incredibly insightful. And then we use it to inform investment decisions for portfolio managers within their respective geo market.
But really interesting to find out that there's that data out there that companies don't even know that they can monetize, as you mentioned. You're creating an awareness there, and obviously Fidelity's got kind of first dibs at that for the right price.
Exactly.
Now, we've talked about this from an equity standpoint. Yeah. Can you talk about it from a fixed income standpoint? This is just as useful from a credit analyst side?
Absolutely. So when you look at the cap structure of the company, it has the equity side, it has the credit side, and the research, being a company that's privately owned, a collaborative setup that has this giant investment in research and data, it allows you to get a view from both sides of the cap structure. Mm-hmm. And then so the same data can be used to inform the bonds as well. We have many examples, but in the recent 5 years is, especially throughout the COVID period, you have these companies where bonds sold off because of a COVID shock. But then you can go look at the sales for this particular company, retailer or cruise line or whatever company you're looking at, and then you can form a view. Is the bond selling off for the right reason or not? Mm-hmm. So you can use that for the credit side as well. And we do have proprietary data within the Fidelity that we've been experimenting with. For example, is migration data. Is when people change their address on the website. They went from this address to the other address. Now, you can imagine a world where that could be relevant for the Muni desk, because you understand the demographics of people going from this particular zip code to that zip code, and then that has direct impact on the tax revenue for the municipality. So it's really there's no limit to how much insights you can get from this data.
I can tell you have a PhD in engineering because you talk about all this with a big smile. We love this. It's just constantly coming at you. You did not come up here from Boston to this studio in Toronto to tell us that quantitative is the way to go, fundamental is lousy and don't go there. You actually came here to tell us about the complementary nature is what I'm deriving from you.
Absolutely. Yeah. Absolutely. I'm here to tell you that, and that's my pitch to everybody. Quant plus fundamental is an incredible amalgamation of information for us to derive alpha for the future. It's durable, it's scalable, it's differentiated, and Fidelity is uniquely positioned for us to bring these two together.
So our viewers are probably saying, wow, you've got all these resources at Fidelity for the fundamental analysts, but you actually also have a fund, Advanced U.S. Equity I'd like to talk about, which came out in January, which marries up fundamental and quantitative. And we should talk about that because then it's important our viewers understand you're there as a resource, quantitative quantitative research and investing. Yeah. So there are funds that are deriving information from the QRI side that are run by the QRI side. Let's talk about U.S. Advanced Equity.
Absolutely. So the Advanced U.S. Equities as a fund has the same spirit as how do you take fundamental insights from the firm and then package them together in a systematic fashion for you to remove any biases that are specific to a style. And then, so the way we look at it is we take all the research data on any given day, we create these signals, and then we put them together in what we call a portfolio that has high ideo risk. High ideo risk, it means there's no style factor, there's no any growth value or momentum bias, and there's no sector bet. So it's the purest representation of what
They negate emotions
exactly.
and biases, as you said.
That's a great way of putting it. And then you put all of these ideas together in an unbiased fashion that allows you to extract the best ideas from fundamental research on any given day. Now, the way it's constructed, it selects the highest conviction ideas. It has anywhere between 50 to 60, 70 names on any given day. And it does well when the fundamentals are doing very well. It's going to struggle when the fundamentals are struggling. But the genesis is, this is a way for you to get access to the best fundamental research from Fidelity in a product.
Very interesting. And I want to go back to what you were talking about as far as going to Montreal for the hackathon. Could you talk about, of the few hundred people that are part of QRI, what kind of education and backgrounds do you typically look for?
We typically look for people that are excited about the markets, that are eager to work with data and models, that are comfortable with working with problems that do not have a textbook solution. And generally speaking, these are coming from STEM backgrounds, science, technology, engineering, and math backgrounds. Some of them go for MBAs, some of them go for CFAs or typical charters. But generally speaking, these are STEM backgrounds that are coming to join us on this journey for us to achieve the outcome that we'd hope to achieve. And
a lot of them probably, you said there's got to be an interest in the markets, but many of them probably don't even think about that. But then they meet someone like yourself and say, I can take what I've got from a STEM background and actually put that into the investment world. There's a need. That's really interesting.
Absolutely. And if you're trained as an engineer, unless somebody tells you or make it an intentional decision to go take courses in finance, you don't get exposed to that entire world. And it's very, very exciting because you get to work with real data, real problems that have direct impact on investors and shareholders, and it's very exciting.
Many universities try and encourage their engineering students to do humanities so that they can actually write, and there's a creative side. But it's interesting what you just said. They should also encourage, and maybe they do now, a direction towards finance.
Yeah.
And I'm curious how many actually do that, but that's another story. We're wrapping up in a minute or so. What would you like our viewers to take away from our discussion today?
I think we live in very, very exciting times. The marriage of quant and fundamental. I certainly believe and highly convicted that's going to be the future of investing. And Fidelity is uniquely positioned for us to capture and be a top player in that space.
Wonderful. Thank you for a succinct summary as well. And so nice to see you, and safe travels to Montreal.
Thank you so much, Glenn.
Good to see you again.
Good to see you too.
Thanks for watching or listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.